Late last week, Fiat Federal Reserve Chairman Jerome Powell addressed his fellow Western central bank allies and the larger investing world at the annual Jackson Hole meeting in Wyoming. A speech of 8.5 minutes, which we can boil down here to the following 30 seconds of hawkish inflation-fighting tough talk.
The Federal Open Market Committee's overarching focus right now is to bring inflation back down to our 2% goal. Reducing inflation is likely to require a sustained period of below-trend growth. We must keep at it until the job is done. Restoring price stability will likely require maintaining a restrictive policy stance for some time. We will keep at it until we're confident the job is done. Thank you.
So the Federal Reserve is planning to raise its federal funds effective rate again ahead, currently sitting at 2.33% as the Fiat Federal Reserve note, or Fiat US dollar, continues losing double-digit percentages in real purchasing power on an annualized price inflationary basis when compared to real goods and services. Such hawkish Fiat US dollar talk led to further relative Fiat US dollar strength exhibited this past week as the dollar gained versus other major competing fiat currencies such as the Fiat euro, yen, pound, and yuan. The Fiat dollar DXY index is currently now at over 20-year high levels, and while we may all be bearish Fiat US dollars long term, I would bet that most of us would prefer for now being paid in them over other faster devaluing competing fiat currencies currently issued. Commodity price sell-offs in Fiat US dollar terms of late have been an illustration of the Fiat US dollar's relative strength versus other competitors, and that is illustrated precisely here by the relative gold price in 2022 in Fiat US dollars and 5 other major competing fiat currency gold prices for the year. Only the Fiat US dollar price in gold is negative on the year's performance to date. Contrasting all this high praise for the Fiat US dollar strength of late, the Russian Federation's Vladimir Putin had some pointed words about global inflation and why the world is increasingly suffering under a new high inflationary secular regime since the late 2019 Jackson Hole Go-Direct Western Central Bank Agreement to blow out their respective fiat monetary basis and coordination. Have a look at what Vladimir Putin had to say a month and a half ago in public.
Резкое усиление инфляции на товарных и сырьевых рынках стало фактом задолго до событий текущего года. Мир в такую ситуацию последовательно загоняла многолетняя безответственная макроэкономическая политика стран так называемой «Большой семерки», включая бесконтрольную эмиссию и накапливание необеспеченных долгов. Не придумав или не пожелав использовать другие рецепты, власти ведущих западных экономик просто-напросто запустили печатный станок. Таким нехитрым способом стали покрывать невиданные ранее бюджетные дефициты. Уже называл эту цифру. За последние 2 года денежная масса в США выросла более чем на 38%. Это 5,9 триллиона долларов. Денежная масса Евросоюза, в свою очередь, также резко возросла за этот период. Ее объем увеличился примерно на 20% или на 2,5 триллиона евро. Сегодняшний рост цен, инфляция, проблемы с продовольствием и топливом, бензином, в энергетике в целом – это результат системных ошибок в экономической политике действующей администрации США и европейской бюрократии. Напечатали деньги в огромных количествах. А дальше что? Куда потекли все эти средства? Очевидно, в том числе на закупку товаров и услуг за пределами западных стран. Вот куда они потекли, эти деньги напечатанные. Они буквально стали пылесосить, выгребать глобальные рынки. Об интересах других государств, в том числе беднейших, естественно, никто не думал и думать-то не хотел. Им оставляли только, что называется, как у нас в народе говорят, ошметки, да еще и по астрономическим ценам. Так, если в конце 2019 года импорт, завоз товаров в Соединенные Штаты составлял порядка 250 миллиардов долларов в месяц, то к настоящему времени он вырос до 350 миллиардов долларов. Примечательно, что рост составил 40%. В пропорции это как раз и соответствует необеспеченной ничем накачке долларовой денежной массы последних лет. Вот напечатали, раздали деньги, и за эти деньги выгребли все товары с рынков третьих стран. Понятно, что такое резкое увеличение спроса, необеспеченного товарным предложением, запустило волну дефицитов и глобальную инфляцию. Вот она откуда, эта глобальная инфляция.
Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a monster box of Silver Eagles.
So click the link below for your chance to win.
Click the link below to enter our new 500-ounce American Silver Eagle coin Type 2 giveaway contest. And good luck to all of you who take part. Both the silver and gold spot price markets sold off in this week's trading, and in a minute we'll look at longer-term price charts to get a sense of where low-end bottom support may be found in the weeks and months to come. The spot silver price sold off nearly 1 fiat note per troy ounce for the week, likely to close just over 18 an ounce. The spot gold price is likely, well, it briefly pierced the important psychological level of 1700 an ounce intra this week, but it's likely going to close around 1750 an ounce bid. The gold-silver ratio climbed to 96 during the week and will likely close at 95. On a technical basis, the gold-silver ratio appears that without a change in Fiat Federal Reserve's monetary and U.S. fiscal policy in the near future, triple-digit gold-silver ratio test is likely in our near future. For silver bullion bulls out there, note at the bottom half of this chart below that shows the gold-silver ratio, the blue line, that throughout this entire full fiat currency era since 1970, we've only had 2 other times. Using the thin green line, you can see, moving your eyes left to right, there's only been 2 other times over this 5 decades and more time span where the silver spot price has been this relatively cheap versus the spot gold price. Once during the brutal early 1990s bullion bear market, and as well during the early 2020 COVID gold-silver ratio blowout to Great Depressionary 1930s levels over 120. So this moment is truly historic for silver bullion buying opportunity for those who are long-term bulls. Moving on to a long-term gold spot price chart in fiat US dollar terms, many gold bears came out this week and were calling for spot gold prices to fail, at least its current support level, at some point in the weeks and months ahead, calling for what could be a sell-off down towards the COVID lows of 1,500 an ounce and perhaps even lower. Now, just a brief pause here so you can get a recent gold market analog I purposely left on the left hand of this chart. Look back to the 2008 global financial crisis where we saw gold fall from near $1,000 an ounce to a low of near $700 an ounce, a negative 30% sell-off. A repeat of that downside performance says that a sell-off near $1,400 an ounce is not out of the historic question. What is a major question, and I lived through it, is that during such a scenario would of course be, would there be any bullion dealers who would have any reasonably priced gold bullion near spot prices at the moment, if that were to pass? Moving on to a long-term silver spot price chart in fiat US dollar terms, many silver bears also were out this week calling for spot silver prices to eventually fail and fall back toward the COVID lows of $14 an ounce or even lower. Of course, in that scenario, again, I ask you, where might you actually be able to buy silver bullion priced with premiums below 20 an ounce if that were to happen? What I am strongly suggesting is to perhaps keep some powder dry and keep some cash on the side in case such a drastic sell-off were to occur, but don't count on being able to buy bullion easily in such a scenario. Perhaps pay attention to what the world's largest and historically longest bullion buying stackers have been doing in near record volumes of late, given spot price weaknesses. For instance, China has recently been importing near record gold bullion volumes. We're seeing gold import levels into China not seen since spring 2018 lows near 1,300 an ounce gold. Of course, for many weeks in a row on this SD Bullion channel, I've been hammering the table, showing you bullion industry data that illustrates India is on pace this year to import nearly 1/4 of the world's annual physical silver supply in 2022 alone, something around 263 million ounces. This full fiat rupee currency era silver spot price chart covers from 1970 until today in 2022, and you can see the massive cup and handle that's illustrated here, and that's a large reason why so many Indians are preferring to buy silver over gold. The increasingly wealthier poor men and women of India are betting on silver over gold not just simply in their jewelry buying, but also in their investment bullion buying. It would not surprise me at all if we came back to this chart in a couple of years' time and saw the spot silver price in fiat rupee terms twice or more what it is currently today. And I say this confidently because of the bullish fundamentals building. It's making it increasingly difficult for the fiat financial powers to buy the silver market and its suppressed spot price for their time, as the fundamentals underlying the fractional reserve system are deteriorating. We continue to see massive silver bullion outflows from both London, much of which is headed to India increasingly this year and probably next, and where London has a silver float at the moment that India could demand in 2023 alone. And also, we continually see a shrinking pile of available registered COMEX silver bullion that fractionally reserves and backs that major price discovery exchange. Today, we eclipsed under 50 million ounces in registered COMEX silver. And you can see here on this chart the speed of over 100 million ounces of registered COMEX silver either being pulled and or switched to the eligible pile, meaning that people weren't willing to deliver it or put it up for delivery. So since the early Q1 2021 Reddit Wall Street silver squeeze phenomenon kicked off, and at the same time SLV changed its perspectives to basically say that they don't have to buy silver bullion if they can't get a hold of it, yeah, all this is unprecedented. We've never seen this. This is all historically unprecedented. So, as you can plainly see, it's not just me saying this alone. It's the data. It's the world at large, which is increasingly taking advantage of current fiat US dollar strength, swapping said faith-based currency notes for the hardest historical monies the world's ever stored value with. That's gold bullion and silver bullion, respectively. That's all for this week's SD Bullion Market Update. As always, to you out there, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.